Let's be honest, none of us started a business to do bookkeeping. But without proper bookkeeping, most businesses don't survive. Bookkeeping is the process of recording past financial transactions so business owners can make better decisions in the future. Step 1 is gathering source documents. These include invoices, receipts, sales orders, and bank statements. Step 2 is categorizing transactions. Every transaction falls into one of 5 categories: assets, liabilities, equity, revenue, bookkeeping. Bookkeeping is the process of recording past financial transactions to support future business. These principles are globally accepted and industry standard. Step 3 is reconciliation. This means stateming helps catch missing or duplicate entries and ensures your records are accurate. Step 4 is preparing financial statements. The 3 key statements are the balance sheet, income statement, and cash flow statement. These reports summarize your business's financial health. Step 5 is reading your financial statements. Businesses succeed or fail based on how well they understand their numbers. Step 6 is making decisions based on financial data. Bookkeeping helps you make smarter, more profitable choices and grow sustainably. Bookkeeping follows almost the same standards worldwide. Whether you run a business in industry standard and universal used worldwide, the core cycle follows the same industry standards used in QuickBooks and other ERP systems. Accounts payable represents a company's obligation to pay suppliers for goods or services received on credit. The accounts payable cycle follows a structured process. Invoice receipt. This standardized flow is used globally across all industries and accounting systems. The first step in the accounts payable cycle is receiving vendor invoices. Invoices may come from local suppliers in Pakistan or international vendors globally. The second step is invoice verification. In manufacturing industries, invoice verification is a global best practice. After goods are received and verified, VEN processes is a standard in Pakistan and global manufacturing operations. In service-based businesses, accounts payable focuses on vendor services rather than physical goods. This accounts payable process is consistent worldwide. In QuickBooks, accounts payable is recorded by records the rating vendor bills. Each process is the same in Pakistan and global QuickBooks implementation. In large organizations, accounts payable is managed through ERP systems such as P, or accounts payable cycle remains the same across enterprises. After approval, vendor payments are processed. Payments may be made through bank transfer, check, or digital methods. Payment control. Accounts payable reconciliation ensures vendor balances match accounting records. These practices are industry standard worldwide. Strong internal controls are essential in the accounts payable cycle. Invoice approvals, segregation of duties, and audit trails. Strong internal controls are essential in the accounts payable cycle. Invoice approvals, segregation of duties, and audit trails ensure compliance. The accounts payable cycle follows global accounting standards. Whether using QuickBooks or advanced ERP systems, bookkeeping fundamentals and the accounts payable cycle are essential financial processes. Together ensure accurate records, controlled expenses, and informed decisions. Bookkeeping and accounts payable are not just accounting tasks. They are critical business control systems. Bookkeeping is a global business standard. No matter where you stay compliant, follow the channel for more global business and finance insights.